This example begins with a fairly well-defined large channel that contains the key feature of a classic bearish continuation. So even though there's a break over the channel's upper boundary, the mid to upper 30s price range is presenting the first area of major resistance potential, following the additional bullish feature of this reversal range prior to the break over the channel, which is turning out to be the possible start of a larger bullish reversal in the long term. Logically, the lower 50s would be the next major area of resistance potential, mainly because it lines up with the upper boundary of the range found in the middle of the bearish continuation. Given the continued bullish developments, we can now position a Fibonacci channel on a fairly steep incline, the basis of which will be this current uptrend line. Then the third point of the Fibonacci channel will be based on the high of the last major downswing point that defines the top of the range we discussed earlier. With this setup, the areas of interest will revolve around those intersections between the Fibonacci channel lines with these defined areas of resistance, which will only become relevant if price manages to hold over this previous range and reverse back up towards the boundary up into the 50s. So it's not too surprising to see more bearish price action now approaching this intersection. In the medium to short-term context, the appearance of these more neutral to bearish candles is given extra confluence by taking place near the upper boundary of Bollinger Bands, resulting in it not being too surprising when this sharp drop takes place within a relatively short time span. Not every intersection with the channel lines is important. These intersections only matter if price is close to or in contact with them, meaning since price is nowhere near this intersection, it ends up not being relevant at all. And depending on how a channel is positioned, some major event like this later bearish reversal at the same price range won't be marked by any intersections at all. In light of these developments over the course of a year, it would be useful to adjust the position of the Fibonacci channel as this more shallow trend line developed. And in this case, it's close to but not near the center of any intersections with the trend line and the defined resistance range, making it extra important to also take a look at those short-term developments such as the candle patterns and where they take place in relation to the upper boundary of Bollinger Bands.